Welcome back. I'm Zinati Guma and you're watching Stock Watch this week, and joining us for a review of the week's stock performances and answers to your stock-related questions is Independent Analyst Jimmy Moyaha. Do send those questions via SMS to 41392. Email us at stockwatch@bdtv.co.za or tweet us at BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, Jimmy. Happy Black Friday. I hope you haven't spent all your money already. I tried to. Yeah, just looking at Black Friday, Jimmy, there weren't a lot of people at the mall. Like it wasn't like a special day where I could say it's different from any other 25th of the month. And I'm wondering if investors are kind of looking at Black Friday, because obviously we know that the consumer has been under pressure, and there's really just been this anticipation that Black Friday might save us. But I don't know. Do you think it will kind of give the retailers a significant boost, or at this point maybe investors are just trading on the hope that at some point next year we will get cuts?
I think you're definitely going to see retailers benefiting from this, regardless of whether the volumes are there or not. So it's a time of the year when consumers look forward to this.
Yeah.
Retailers, I think the other thing is retailers or consumers over time have realized that the specials may not be as great.
They really aren't.
I mean, you're under pressure. Interest rates are high. You have to now think, do I buy this on debt? If I buy it on debt, do I really want to be paying back my credit card at 18 or 20 or even 27% for some people that have taken personal loans? And you sit there and you weigh up that option and you start to say, is this something we actually need? I think COVID has definitely shifted a lot of things from a consumer spend and a habit point of view. It's priority spending, but also if I'm going to go out and buy 100,000 Rand television, do I want that TV or do I want to take 100,000 Rand vacation?
Yeah.
What seems to make more sense for me now? I think people are just making slightly different choices. The craze was there many years ago, and it was there when companies like Massmart first brought Black Friday into the country. And I think we've just come a long way from that point, and consumers are largely under strain. So it's not that they don't want to spend, it's that they're unable to, and where they are able to, they're just making different choices, I suppose.
Yeah. And talking about choices, because usually around this time people would be buying TVs, so you'd get kind of macro Massmart benefiting from that. People also redoing their homes, buying paint. But I don't know if maybe we can expect that right now, because I mean, we have seen Cashbuild, Italtal, those kinds of retailers being under pressure, and maybe it's just a case of the economy is in such a bad place that even Black Friday won't boost those kinds of retailers at this point.
Yeah, I think we've definitely seen, like I said, a shift in what's been happening. But also alongside that, if you look at some of the retailers, they had prepared, and they've prepared even bigger than the last year and all of that. And there is a bit of pent-up consumption that might be sitting with consumers to say we were under lockdown and all of that. But I think that sort of wilted away at the start of this year. I think with the elevated interest rates and inflation levels, that created a bigger concern for consumers to say, let's look at our pockets differently. But also markets and investments haven't necessarily been on the up. I mean, the emerging markets are only starting to really come back into the fold now, and you see guys like SPAR under pressure from a numbers perspective, with debt levels having increased as a result of those interest rates. Pick and Pay also under pressure from their numbers. So I think overall, because the consumer has been feeling a lot more strain, that would have naturally translated into the retailer side of it. I think going forward, we might see that there might be a bit more appetite in certain areas. So in the past, you may have seen consumers say, these are the tech things that we want, or these are the things that we're going to rush after, and we're going to time it for Black Friday, Cyber Monday. I'm interested to see the data that's going to come out, because every year we have this conversation before, we have the Cyber Monday conversation, and then by Thursday, Friday, we're having the conversation of saying, what were the biggest largest spend items, largest spend values, which transactions and that sort of thing. I think people are comfortable buying online. That might be another reason you didn't see too many people in malls.
Yeah, maybe.
People are comfortable shopping on Take-A-Lot, or even Massmart has got online offers.
Yeah.
And some companies actually do online exclusives. So a promotion that's available online is not available in store. So why should I then rush to a store at 7 o'clock in the morning where I can just swipe on my phone and achieve the same result? So
yeah, all right. Well, let's cross on over and leave South Africa and go to India. There's a question here. I am a firm believer that India will be the next front for global growth, and I would like to buy the entire index. Could you please ask the panel, not a panel, just one, Jimmy, what he thinks is the best ETF to buy to back India's growth? I'd like to constantly dollar cost average into India for a long-term bet. Yeah, India has actually been quite popular this year. Didn't their growth exceed China as well?
Their populations also at some point exceeded China's population. India is poised for a lot of growth, and I can see why any potential investor might be interested in the region. And if you think about, I mean, just to look at the question, exposure into that space, the Nifty 50 would give you exposure into the top 50. It's the equivalent of our top 40 in terms of Indian exchanges. So if you go to the Indian exchange, you could pick up that. From an ETF perspective, I haven't actually looked at Indian ETFs, but there is now additional complexities from what the investor wants around consistent dollar exposure as well, and dollar averaging in. So I can't give an immediate answer off the top of my head that encompasses all of those things. But I would say that, I mean, if you're looking at if you're looking at index exposure, ETF exposure, that's going to sort of put you in a fairly decent spot because you'd have a diversified approach to the market. Again, time horizon, are you looking to do this for 12 months? Are you looking to do this over 5 years? Because India is poised to be a leader in the tech space, the development space. A lot of tech-based businesses are outsourcing their talent through to India, and so that's going to increase the human capital component that sits within India, and that's going to position their economy a lot better. So the type of exposure that you might be looking for, if you're looking for exposure to Indian-based companies, might be different to exposure to the Indian economy and the growth of that economy. So that's another thing to consider, I suppose.
I'm actually interested, talking about tech. NVIDIA, obviously, the massive hype around it. Would you rather go for just investing solely in NVIDIA if you want to be exposed to the tech space, or would you go for an ETF that encompasses everything?
Anyone who knows me knows that I've given out, whether it's stock picks or approaches to investing, I've always preferred a diversified approach. And I think with the concentration risk that comes with NVIDIA, I mean, you saw NVIDIA run up more than 200% at some point. And for you to then see that, you need to expect that there will be some level of retracement. So going in and overexposing yourself to a stock that's run up 200% without expecting retracement is not the way I'd go.
Retracement, but not saturation.
Not necessarily. I don't know. I mean, from a saturation point of view, you have to think of the fact that SoftBank has launched, or they listed their competitor as well, in, I think it's AMR or AM?
Yes.
Yeah, that listed recently. ARM, listed recently on the New York, or on NASDAQ or the New York Stock Exchange. So you do have competitors and alternatives to NVIDIA. Intel remains there, IBM remains there. You do, NVIDIA being the largest chip maker, I think NVIDIA got the boost that they received from a lot of factors that happened to align at that time. I mean, for a share price to touch almost $500, having run up from what last year's $150, that's huge gains. And you can't then say that gain is going to be replicated right now from $480 odd to run another $500 to $1,000 without some level of retracement. So if you want to take the concentration risk and put your money there, that would not be the advice that's coming from me. It wouldn't be a recommendation. I think if you want to gain exposure into the tech space, you should probably be looking at how you do that, because we are also seeing that there's analyst expectations that the Chinese tech space is poised to grow at a faster rate than the NASDAQ. And so you have to now weigh up those pros and cons as well. So,
I mean, it's going to be very interesting to see what they churn out in the next quarter. I mean, just saying that their revenue just continues to run. They expect growth of about 231%. That's a lot.
For any company.
Exactly. Let's move on to Karoo. Talking about companies that are on the NASDAQ. Can you please tell me why Karoo jumped by some 40% on Tuesday? And then down again by 16% today. I actually did not notice those moves, Jimmy. What was happening there?
I spoke to David Shapiro about it on Wednesday when it happened Wednesday market close in the Wednesday auction.
Yeah.
And it jumped 40%. We couldn't figure out whether it was a fat finger error, whether there was anything that happened there. We expected that the market would come back and rebalance. I still don't have an answer. I mean, the share price is down about 4.7% today. But when that jump happened on Wednesday, I had the same questions as the investor.
And
say, is something happening? Is there a deal that's been announced that we don't yet know about? So it's one of those things where I haven't seen much of an explanation around it. I could probably check SENS while you are sitting here.
And you know,
anything's come out, but nothing came out yesterday from Karoo from a SENS point of view.
Yeah.
And today there is nothing as well from a SENS announcement. So we are all just as curious to figure out what's
happening. And that's the thing, because it's quite interesting, because Karoo over the last few months we have seen these heavy movements in the share price, but not this heavy.
No, 40% is...
It's usually capped at maybe like, I don't know, 10% on the day, but this is a lot. Okay, so yeah, definitely nothing on SENS, but we will be looking out. Maybe there's some sort of rumor that, Jimmy, they're just not telling us.
It hasn't made mainstream news, if there is one. It hasn't hit any of the news outlets that would be reporting on it. So.
All right. There's a question on Sasol, if this would be the right time to buy Sasol. I know that... Sasol is considered to be quite cheap, but there's also been a lot of conversation about their climate change targets. But I'm actually not sure how that has impacted the price, the share price, if it has. Not so much news about that last week since their AGM. Would you be going into Sasol at this point?
I laugh because I actually have a lunch date with Sasol shortly after this conversation. Sasol's share price sitting at about 214 Rand. Has the potential to come down to 200 Rand. Very good value if it does come to 200 Rand. I think the run up from Sasol, if anyone's looking to get into the stock, please don't be having the conversation of saying, is the share price, should I wait for 30 Rand, should I wait for that? That's not going to happen. That was a black swan event linked to their oil exposure and what happened at that time. 200 Rand is a fairly good support level. I mean, the last time we tested around this was around mid to 2021. So if we come down to 200, you could see the share price could bounce there quite nicely. I do happen to like the diversification they've been able to achieve, branching out into chemicals, getting the business, sorted from not being as coal heavy. I absolutely love the new CEO, Simon Baloyi, that's coming through. He's been at the Secunda plant for yonks, I can't even remember how long. And so for him to step into the executive role with Fleetwood stepping out, that is clear that it reminds me of what happened with FNB with Mary Vilagazi coming through, promoting internally. The business is strong, it is sound. So I'm not concerned about Sasol's leadership and the leadership changes, despite the fact that the chairman has stepped down and we're still awaiting to see what could potentially unfold there. I think 200 Rand could become a very attractive price, and I'd be very interested to see what happens.
Because of this diversification that you're talking about, do you think that it's time maybe investors stop thinking about Sasol as the oil company where, you try and find out what is happening or try to decipher what's happening in the oil market and then say, okay, now's the time to go into Sasol or pull out? Should we get that out of our heads, or maybe it's not time yet?
I would. I think if you look at Sasol's operations, I mean, aside from what they're doing on the in the oil space, they've got that gas pipeline running through from Mozambique into the Secunda plant, and then feeding into they feed into the grid as well from an Eskom point of view. They've got coal operations. They have those chemical operations, the Lake Charles projects, and all of that have come to light. So I definitely think they are not just that oil company. They've been on a very green drive as well to be a carbon-friendly producing company, which is very interesting given the exposure and the industry that they play in. I mean, it's not often that you see companies put that foot forward, and we've seen it from Sasol, we've seen it from BP internationally as well, we've seen it from Engine. Everybody's going that cleaner route, but Sasol has been able to diversify their business quite a bit, and you've seen it in the relationship between the oil price and the share price.
Yeah.
So yes, it does still have a bit of an impact, but it's not nearly the same as what we saw when what was it, April of 2020, when the oil price crashed down to negative levels on futures, which was a historic event I don't think we'll see for another 100 years. But aside from that, Sasol is no longer that exposed to oil. So if something like that were to happen, I think they'd weather that storm better than they did the first time around.
All right. Well, quickly before we get to your stock pick, I'm not sure if you do follow the stock, Cameco. I bought the stock at $22 and it has now almost doubled, but its PE sits at 100. I've been skimming profits, but the share price still goes up. Please explain how the market responds to the stock. Is this one that you follow, Jimmy?
Definitely not. Listed in Canada, they are a mining company, and I think they deal a lot in uranium.
Yeah.
The company's basically had a rocker of a year. If I look at just movements over the year, they sort of closed out December of last year below $25. They're at about $45 at the moment. So they've more than doubled over the course of, or almost doubled over the course of the last 12 months. It's been one-way traffic to the upside.
Yeah.
The share price is trading at all-time highs at the moment. So interesting to see. And if you have a look at the graph, it literally is a line that goes in one direction.
Yeah, yeah. Actually, if I remember correctly, I think Drickus Komrink actually is a uranium person, so I'll keep this in my pocket for when we have him on the show as well. Let's get to your stock pick for today.
That's interesting. There are so many stocks that are lining up for really good price points and really good value points. I think if I have to look across sectors, I can pick anything from a growth point to a premier group that's just had really good results for their first set of interims. And some of the other stock picks that I gave out earlier in the year, I also gave out base levels to say the stock could come down to these levels. If it breaks that level, then I'm only concerned. And almost all of them have rebounded off those levels. I'm thinking Walt Disney, Sibanye bounced off 22 except for that convertible note.
Yes, this week.
I'm not too worried about that convertible note, believe it or not. I would still be looking at that.
Okay.
But if I'm pressed for a pick at the moment, I think I might like Sasol down to 200. I like Growth Point at the levels where it is at about 10 Rand at the moment. And I do like Premier having just bounced off of that 20 Rand level. I think it is at attractive levels. So I've not given one, but I've gone ahead and given three because it's Black Friday and we're festive, right? The festive season's around the corner.
Fine, we'll forgive you.
But I'll do a bit of a detailed deep dive into some companies before the end of the year and give my expectations around next year as well. I remember I gave out a stock. I think it was PayPal a couple of months ago. And the stock bounced quite nicely off of $50. It's still sitting at $56. I'm not too fussed about that. So and I've said this before, a lot of stocks are at very good prices where you get in now, you're not going to be seeing that return immediately. Don't expect it to be the Occidental Petroleum that I gave out shortly around the time Warren Buffett got into that. But don't expect those sorts of movements now. Expect that values and stocks are at really attractive pricing, but you're going to be holding for a bit longer than what you were in the past.
Okay, thank you so much for your crystal glass throughout the year, Jimmy. That was Independent Analyst Jimmy Moyaha.